There are some benefits that have existed for a number of years. I mean, first is the energy savings. We're at a time and a place in the industry where LED technology has kind of stabilized. So it's not, the efficacy isn't increasing in terms of leaps and bounds like it used to, but it still provides anywhere from 25 to 80% energy savings, depending on the legacy light source, the environment, the application. But if you look at any type of outdoor lighting, indoor lighting, decorative lighting, if you have a existing fluorescent lamp or an HID lamp and you're converting to an LED light source, it's going to provide somewhere in that range. And then if you add in controls, you can even increase that depending on your facility and your site. So the first and most important benefit of doing a lighting upgrade is those types of energy savings percentages. The second thing is rebates offered by local utilities. A lot of rebates originally focused on LED lamps as the technology was becoming more mature. Now you see them gravitating more towards fixtures and controls and embedded controls. And in a lot of areas, you can get rebates that cover, most, if not all, of the cost of the lighting project. So that is something that every facility owner should look into, or partner with a reputable group that understands that and that can implement utility rebates if they exist in their area. And then the final thing is, there's a lot of financial vehicles right now out there in the industry. The one that I'll focus on is called Lighting as a Service. And what it does is it's a off-balance type of financial vehicle where you can actually pay for the lighting project through the savings. So there's no upfront cost. There's financial companies like Redaptive or Spark Fund that specialize in that type of financial vehicle. And a lot of companies are currently exploring that so that they don't have to pay a whole lot of cash up front to fund the retrofit.
It's kind of interesting to understand the context of using recovery of investment costs through depreciation as an economic incentive for capital investment and for job creation, for hiring. The use of depreciation goes back to 1986, which was by far the most prolific tax code change that we've ever had, and it introduced the concept of accelerated depreciation. And it changed what had been a straight line recovery of property over whatever the life of the property was assigned to what's called a double declining. So it really increased the annual tax benefit and accelerated the tax benefit of those investments. Well, in 2002, they went a step further. Congress went a step further and introduced the concept of bonus depreciation. And at the time, that was 30%. Whereby in year one of an investment, you could immediately deduct 30% of the cost, and the remaining 70% followed the pre-existing accelerated recovery system in place. Over the years, that 30% became between being expired and extended and increased to 50% and back to expired again. It kind of, the concept of bonus depreciation caught on, and it spent much of that time at 50%. In 2015, there was another act, a PATH Act, that did something interesting in that it included leasehold improvements, which are what most of the types of expenditure that we're talking about here in renovating the inside of a building. It included those costs into the eligibility for bonus depreciation. And it left it at 50% with a phase out towards 2020. So fast forward to the Tax Reduction and Job Creation Act in late 2017, effective 2018. And this act actually increased the bonus percentage to 100%, which was great. And it was intended to obviously jumpstart capital investment and jumpstart job creation. However, that's where the comedy of errors ensued, in that while as part of increasing that bonus depreciation, Congress intended to simplify the types of properties relating to leasehold improvements that would qualify into one class of property. And they did that. The problem was when they did that, they literally forgot to assign a class life to that new class of property. And therefore, according to prevailing tax law, it defaulted to 39-year property straight line. Both parties of Congress admitted that was a mistake. That's not what they intended. It was the opposite of what they intended. However, it took a couple of years due to the partisan, nature in Washington during that period. And in order to fix that, and along came the CARES Act with the COVID relief package. And I guess that was a perfect platform with a very bipartisan bill. So they attached the correction of that unintended consequences to the CARES Act. And suddenly improvement related to the internal portions of building now receives the benefit of 100% depreciation. So, the contrast is quite, jaw-dropping, going from 30-year straight line recovery to recovery of the entire investment as a tax deduction in year one. So that's kind of the history of what got us here, and why a lot of people now are, reconsidering those that perhaps put off investment in that unfortunate 2-year period of very little tax benefit. Many people now are reconsidering investment in this climate.
And the short answer to that is no. I mean, Acuity Brands offers a lot of lighting and controls that can upgrade the existing lighting system without touching any of the infrastructure. And there are a lot of good and quality turnkey lighting contractors out there that have done this for many years, and they can actually work around a existing company's schedule. They can come off hours or during the weekend. So the short answer is that if you want to move forward with a lighting upgrade, we have both the product and the partners to cause minimal, if no, disruption to an existing company's infrastructure and schedule. Now, if you want to actually change the aesthetic of your facility, if you're a restaurant or a retail operation and you want to change the look, we have plenty of offerings to do that too. Both that would change the infrastructure, if that's what you're looking to do with your facility, or would not change infrastructure. I'll give you an example. We have a product called the VLTR. So it's a lighting retrofit kit, and it goes into an existing fixture housing, but it upgrades the look of the fixture housing. So a very popular type of lighting fixture that exists in classrooms for schools is a fluorescent troffer, whether it's T8 or T12. With this particular product, you would take out the lamps, the ballast of that existing fluorescent troffer, you would take off the lens, but you would leave the existing housing in the ceiling. And then our BLTR kit is actually designed to go into that existing fixture housing. So you don't have to get above the plenum, you don't have to disrupt the ceiling at all. It'll install within minutes into that existing fixture housing, save a lot of energy, and also upgrade the aesthetics of that classroom. It goes from an older style troffer look to a new indirect look. And a lot of people are doing that. So we have, again, products that pretty much cover all facets of the facility, whether it's outdoor, indoor, controls, and can do that without disrupting your business at all.
Okay, so let's talk about what actually qualifies under the new law in what is called QIP, by the way, qualified in improvement property. So what qualifies and what doesn't? The high level answer to that is any improvements made to the interior of a building that is not a new building. So it has to be made to an existing building, a building that existed prior to the tax year in which the improvements were made. Examples of that include drywall, ceilings, fire and security systems, and obviously lighting and controls. And so just about anything you could imagine would qualify, with a few notable exceptions. And that would be any improvement to the structure of a building, i.e. load-bearing type of beams and so forth. It does not qualify for this benefit. HVAC systems do not qualify regardless of where they're placed, and roofing does not qualify. In addition, elevators and escalators do not qualify. But that's the pretty complete list that was explicit in the law that is excluded from the benefit. So most anything else in the interior of a building, I would suggest that obviously anyone renovating a building, interior parts of the building, should consult a tax advisor as to what it does and does not qualify. But the law is pretty explicit, and most of the obvious features like lighting, controls, drywall and ceilings and so forth would qualify. And so that's the property that qualifies. And if you think about, okay, what kind of business do I have to be? And you have to be a property owner of a non-residential building. So the building cannot be, for example, apartment buildings, anything residential. But any other type of building used for commercial purposes is fair game. And the other consideration, anytime you're dealing with tax law and tax benefits, each individual taxpayer has their own tax profile that could affect outcome of a benefit or a detriment. C corporations, I have right now a 21% tax rate, so that would be the rate that should be considered as resulting in a cash benefit. So whatever the deductions are times that 21%. For pass-through entities, whereby the taxpayer is actually an individual, that's where you get a wide variation of potential benefits due to the different tax brackets of the individual. But there is a tax benefit. It's just a matter of the individual calculation of those benefits is a very tailored process. It should be done by a tax professional. The other consideration is if a business entity has net operating losses in the past that potentially could preclude them from actually benefiting in a year because they're using those operating losses going forward, then there is the ability for a property owner to elect out of the bonus depreciation and back into a 15-year life, a recovery life, not the 39-year that was corrected. So it could be in some cases that it makes more sense to use a net operating loss in the current year so that it doesn't expire, and to defer the benefit of recovering the property over 15 years. So again, the tax advisor could help anyone determine which option would be better in that regard. So I think those are the basics. Those are the basics on who would qualify and who would not. Now, in terms of not-for-profit organizations, obviously, if a not-for-profit is not paying taxes on a portion of its business, then there's no benefit of a tax deduction. So some not-for-profit organizations do have what's called unrelated business income that's calculated on a portion of their business, for example, cafes, bookstores, and so forth, to the extent that some of these renovations would be attributable to that. There's a potential that there could be some benefit relating to that portion. But again, that would be a highly custom and tailored analysis that should be done by a tax professional.
Yeah, and then from a execution standpoint, Acuity Brands has made it extremely easy to move forward with a lighting upgrade. The first and foremost, you can go to our website, and on our website, there's actual map where you can type in your zip code, and it'll point you to our local sales representative that you can talk to about your facility and what you're looking to do, whether it's a strictly energy savings project or an aesthetic upgrade. It'll also give you authorized electrical distributors for Acuity as part of that search. And you can also look at some very strong and long-standing associations in the industry. The one I'll call attention to is NAMCO, NALMCO, which stands for National Association of Lighting Management Companies. It's an organization that its members are both manufacturers like ourselves. We're a proud sponsor of NAMCO, and also turnkey lighting contractors, which are groups that do everything from audit to present a proposal to a facility owner, install and project manage and implement the rebates. And NAMCO has been around for a long time. They have training credentials so that when you have a NAMCO member, both doing the proposal and the project management of your lighting upgrade, that you're getting someone that has done this, has been experienced with it, and is extremely professional. So I think between the Acuity Brands website and associations like NAMCO, you can easily both explore whether a lighting upgrade makes sense for you, and if it does, actually execute on that investment.